Welcome to TradeTheMBI.com. This Jones report is for the 20th of October, and a little more softness. Again, we had this simple ABM yellow line as the deciding factor here at above 76%. You can stay long. We briefly were above that, and then we hit short signaling going through there. We've been in this DOC spread for a while in this softness. And it's just been a battle of the shakeout, whether or not it was able to, get back after the positive extreme. And we filled that one the other day, then put in the magenta, and then suffered more continuing decline in that shakeout reading. And we were watching the Power Mo as it began to roll over. We were looking, and there's that magenta spike as it pops over. Not good from a positive market standpoint, that's for sure. And steady declining red with green filling as well. So we're going to get another DOC reset. The question will be whether we get a turnaround as a higher pivot, much like we did at the original start of this buy run that took place back over here when we pivoted higher off of it. If we take out that previous level, which is at minus 1024. We're currently at minus 786. Break below that, we should expect to see further dip. So that's what I would be watching for. But we expected this kind of increase in volatility as we got closer, and uncertainty about the election, which side. Some people have seen narrowing of polls. You get the final debate coming up. There's a lot of little things taking place that are causing a little bit more upheaval as to direction and where money should be placed. Here we have the NASDAQ finally getting its fill. So while the S&P was slightly different, we knew that the NASDAQ was the market that was leading things, and it needed to still fill that positive extreme. It finally did that, putting in a negative magenta candle here on the week setup. So it doesn't quite have the same crossover yet of the Power Mode 2 that the S&P has. So clearly you're probably going to get more volatility out of the S&P than you will out of the NASDAQ in that particular case, since clearly the S&P has underperformed in general. From a Euro standpoint, buying back a little bit of that safety. And again, we're just hovering right around this 50%. This is that ongoing battle that you have between Eurocentric forces who would like to see a softer euro, as well as potentially some of the capital flight that we've been seeing as a hard bird exit goes back and forth, and that's just going to depend on the preferences. But if there's turmoil in the U.S., that's certainly the Fed is going to want to keep that euro elevated to help promote growth for the American market, at least. And again, with this inconsistency of the COVID situation, it just remains central markets, central banks are determining how things move from there. When there are significant down market days, you end up with a little bit of softness in gold as people trade out of it for covering positions, but usually that ends up leading to a spike a little bit later. And so this is how it started out. We ended up with nice turnaround buy from the dip early on. We ended up progressing nicely, and then we ended up with DOC spread, and we stayed there with the steel. Notice that steel going all the way across the whole day, no reset, and that just meant that every little press up was just met with more resistance and selling, and it continued to fade every little time. So every time there was a little attempt at it, it just didn't have any significant support. From a consistency standpoint, we needed to see that reset. We finally hit the reset in after hours, coming back over here, and that has led to the pre-market push that's finally brought us back up to relative highs to that. But again, we have the 3450 algo level from before, and this is just back and forth to the same areas that we've seen prior to this. So not that dramatic. This happens to be pink bar of the approach cross. If we look at it from a deal content standpoint, we ended up with the magenta readings there. We ended up with the soft buy it just was never able to produce anything. And then as long as it stayed with that, it wasn't until it finally broke down on the low there on a rising gold that went full red mode all the way until the end, until we turned around by was right around the 34.23. We're at 43 right now. So still, like we talked about, increased volatility, bigger ranges, and still staying within the general areas. We can see that we have the 33.98 range on the downside to it, and like we talked about, the 34.50 on the upside from previous hour level before. So we're just going to continue to battle through and around those, and that's just going to be a continuation for probably the next couple of weeks. It should be interesting around the famous crash date as we approach October 29 and that, and we'll certainly see when things develop as the debate draws near. We're probably going to see some added volatility. They're going to use the after hours to try and propel things again, just to keep the range, at least from a daily standpoint, relatively modest, but intraday there's a lot more volatility than normal. So all exciting from an intraday standpoint. As always, though, I will update anything relevant as it pops up. Trade well. We'll talk to you later.